Okay, today is October 28, 2015. Let's take a look at the market. Today was the FOMC meeting announcement. It came out, and certainly, it wasn't a big surprise to see some volatility, but also the manner in which that it bounces back. I think it caused some people, or at least a few, might be in a little shock. But anyway, we're going to go and take a look at that just a little bit later. But first, let's take a look at the S&P 500. The S&P 500, we've been, watching this particular level here. All right, let me get my pointer in here. So we've essentially been watching this 2040, right, this level here, and also this particular trend line. So you can see that it came down, and in the earlier we were basically looking for maybe a possible pullback down to this 1993, or even at least get down to this, even it might be even get back down to this 1972. Okay, so it didn't come pull back too much. Only came down to tag this pivot high. This is the last Fed meeting day, okay, in September, right? And it came down, and then it just kind of bounced right off, and then we're basically looking after it book to this 2040. We're essentially looking at these two levels here, primarily the 2056 and the 2079. So you can see right now, today's Fed meeting actually pushed right to that 2079. Okay, and right now we got these Fibonacci retracement here. Originally, I set this up to essentially use it for a major move to come back down to the retracement zone, or some of these retracement level. So right now, that doesn't seem to be applicable. So I'm going to take this out, and instead we're going to take a look at the let's say a more like a double bottom type of major move here. Okay. So we set this up, and here's what we're looking at right now. Is this 1618? It's actually up here at this 2116. Essentially these highs here, right? These highs. So the first one that I'd be looking at, if this, the market continue to push higher, I wouldn't be surprised to see it to come close. If not, take out the all-time high. So we probably have to just kind of wait and see. And at least in the near term, we're basically looking at this 2103, somewhere around here, this pivot high, or this area here. So if we take out some, put in some of these level here, so we might be looking at something on this 2102, right? And maybe possibly on this intraday high on the 2114. Okay, so those are the basic level that we might want to keep an eye on. And if you notice, this 2114 is very close in confluence with this 161 extension of 2117. Okay, this double bottom extension here. So if we want a major move to get up to the 100%, then we're talking about 2176. And if we just go and say we want an 80% major move, so let's do this, change this to an 8, and we could see what actually come up is 2145. That basically well exceeded the all-time high, right? Okay, that was back in May 20th. Okay, so if we take this back down to 161, let me change this back to 618. Okay, 618. So right now we're basically targeting this 2100 area, right? To 2100 to 2117. So these pivot high here. And if we pull back, we're basically looking for this thing to come back to this 2040. It didn't pose too much of a resistance on the way up, but I believe on the way down, we probably will test this 2040 for a little bit. And if that can't hold, then most likely you're going to come back down to this 2020. Okay, and if we take a look at the SPY, okay, the SPY we've been looking at this 204.40, right? That's equivalent to the 2040 on the S&P. And we got this little flag, basically it's pulling back. We're also thinking about that it might, come back down to the 20, before it break through here, or come back here. We're basically looking at it might come back down to these level here, right, to test these level. And I said I wouldn't be surprised that it might even dip down and fill this gap if, if the market get a little bit more weak, and pull back to the 50% retracement. Okay, so we basically was looking at this swing here, okay, and the Fibonacci retracement. So right now we're going to go back and do the same thing as we did for the S&P 500. We're going to essentially look at this thing as a double bottom here pivot off of this, Fed day pivot high, and we're going to get some major move here on the Fibonacci retracement. So you can see that 141 is the 211. Okay, so we essentially got some level at 211.99. Okay, it's basically some of these previous high here, back back in the early in the year. Okay, so that's basically what we're looking at right now on the SPY here. And if we're gonna pull back again, we're basically looking at this 204.40 and possibly retest the pivot high on the September FOMC Fed day. And then today, right now, we're just going to push right to, and if we get up, it's probably going to come up to this level and also to the 21.99, essentially about the 212, to 11.99. Okay, so if we go and take a look at the intraday, so we can see the level a little bit more closer. Okay, so essentially, so you see that, on the 1 hour chart, we saw that, let's go to the 15-minute, and then we can see exactly what happened today. You see, that's when the announcement came down, okay, and then, so we're basically sitting up here right before 2 o'clock, and it was above, 208 or somewhere around there. Then, as soon as the announcement came out, then the market just kind of, puked and went down. So that seemed like an opportunity, if one did not, take a look at that and got in on some of the dip play, okay? Because basically, here's how it looked. It just came down. You see, you got a couple of these little long wicked candle here. All right, so the couple area that we would have got in, is probably up at this particular pivot. Right, you could have gone in at this pivot. If you're brave enough, you could have gone in on this candle here and then maybe set up the stop down here. But if you got into pivot here, then you could use any of these low as your stop, and then just play it up. I mean, these are the things that you want to, play off the, overreaction. Okay, so it's just like last time. Remember, it shot up and then kind of faded. Well, this time it got flush. And then it just kind of, work itself back up. So if we flip this chart over, it's basically, it's just like a flip image of the last FOMC day, right? So that's how we, got in on some of the play here. And you can see this market is, still pretty resilient on the upside. And I think it's just going to continue to, move up here. Until a lot of the negativism or people that is still in shock about how quickly this market bounced back and give up and join the party, and then I think that's when this market will roll over. But again, let's go and take a look at the NASDAQ 100. The NASDAQ 100 keep on pushing. This gap here is the Amazon and the Google post-earning day, the day after they posted earning in the after hour after the previous day close. Okay, and some of you might not know, but I've been telling some of the some of my Twitter followers, even way back last year, that I believe this market won't be, won't roll over until the NASDAQ 100. Go and take out the .com bubble high, because even back in May timeframe or even before that, a lot of the indexes is already making a new all-time high. this NASDAQ 100 is still lagging. Although the NASDAQ composite made a all-time high and took out its dot-com bubble high, but the NASDAQ 100 did not. Okay, the NASDAQ 100, the closing high was made on March 27, 2000, and then the intraday high was a couple days before that, the 24th. Okay, so the number is 4816.35, and I believe this number is going to be taken out because it just is, the market come too far and getting too close that this number is not going to be taken out, and this index is not going to make an all-time high, to be on a record book along with all the other indexes. So now, will the other indexes make another new all-time high? Well, that's to be determined. It's all determined, what are the sentiment and where are we in terms of the business cycle and the market cycle. It could be that, because if you go back and look at year 2000, you can see the S&P 500 and the Dow Jones, they already topped out and they are on the skid coming down, while the NASDAQ 100 is still climbing because of all those high-tech .com, the high cap, large cap tech company just push them up. And this time it could be the same, because you notice right now you're seeing the Facebook, the Google, the Amazon, right? The Apple. So it's like a deja vu. So you just have to watch that, and who knows? It might be different and it might not. So, but just bear in mind, anything is possible. Okay, but right now it's getting very close to a multi-year high right now. And I expect that most likely will tag it. And then once you tag that, get into this zone, get into here, the closing high, right? 4704, this number is in play. Okay, so basically I just want to bring that out on the NASDAQ. If we get a pullback, we could come back, and then maybe fill this gap here and get down to the 4450. Okay, and then get a nice little bounce off of there. Okay, so just kind of keep in mind that some of these resistance level up here, it's not going to go straight up, but you never know. So also Facebook is scheduled to report earnings next week, so that could be another catalyst. Okay, so let's take a look at the Russell 2000. Okay, the Russell 2000 was kind of low lagging. All the other indexes is still lagging, but today got a nice move here. It's over almost 3% move. Okay, so right now we're essentially looking at this 1180 as a potential resistance. Okay, and then if we could get above that, then the next resistance is 1200. Okay, so we're essentially looking at this gap here. Okay, this level is basically this gap level, this 1800, and then the 1200 is somewhere around these these pivot. Okay, so, and also a couple of these pivot low. So those are the numbers for the Russell 2000. And then just kind of quickly go and take a look at the Dow Jones. Okay, you see the Dow Jones Industrial book through this channel here. So right now we're looking at this 17.8, 635. So right now it's kind of moving up, and wouldn't be surprised that it's going to come up and try to tag this 18,120. But again, if it pull back, here's that 17,068. This is the level that we're watching. And it's also, basically in confluence with the 618. Based on this rank here, this 17,068 is the December 16 close last year, last December close. Okay, so those are the number. Probably was, if we're gonna pull back, we could get a little flush down here, and pull back. But again, we're basically kind of looking at these things because the momentum is still quite strong, and then maybe push it up to close to this 18,120, and then maybe come back down and test this level as potential support. Right? And taking a look at the Dow Jones Transportation. The transportation is still, trying to catch up right now. The last couple of days wasn't doing too good. Okay, so like today, it's almost just sort of unchanged pretty much. Okay, so we just kind of have to wait to see, would it be able to hold this channel and then come back up? Okay, so because as long as, if until we see the Dow or the S&P, basically the Dow Jones Industrial hit a new all-time high, Right now, we're basically just kind of watching the transportation. Is it going to make it all a new low down here? Okay, so just kind of keep an eye on this. So that's basically the market, and I'm gonna terminate this, end this video now, and then I put in a separate video to look at the momentum stocks such as Apple and Facebook, and then if I have time, do a separate video on the financial. Then we could go back and look at Goldman Sachs and BofA and Morgan Stanley and those guys. Okay, so let me just end this video.